Thank you all for coming. My name is Luke Pardue. I'm the policy director of the Aspen Economic Strategy Group, together with Melissa Carney, our co-chair, our director, and then Tim Geithner and Hank Paulson, our co-chairs. I'm very excited to welcome you for what should be a fantastic panel. One quick note, feel free to hang outside, chat afterwards, and then please do pick up a copy of one of our previous policy volumes that we release each year. They're a collection of essays on various topics. They're really well done, so please grab a copy. And with that, I'm happy to give the floor to Tim Geithner, the AESG co-chair and 74th Treasury Secretary.
Yeah, this group that Hank and I co-chair was founded in 2017. Yeah, and the basic mission is to help encourage a bipartisan conversation about ideas, about evidence-based solutions to the hardest, toughest, big economic policy questions we face. And as you heard, Melissa and Luke run this endeavor, and they're responsible for bringing us together here today. This program, I think, is at the center of one of the great debates in American policy today, which is about how to craft economic strategy in a more dangerous world. What level of trade and economic integration is consistent with our national security interests? What level of integration is important to sustaining our commanding advantages in innovation today? What technologies do we need to protect and defend? What do we actually need to build in the U.S.? And what level of resilience in supply chains is necessary in what industries and technologies? What's the right mix of subsidies, tax incentives, protection, investment, and export restrictions? We were the leader. The U.S. was the leader in the design and manufacturing of the first microchips in the 50s and the 60s. And that position was built on a mix of private capital and government support, a messy mix, a messy changing mix, a messy process that would challenge much of what you think we know about markets and government, about what works and what doesn't. The U.S. has sustained that lead in design, but we lost it or gave up part of it in manufacturing. And we're now in the process of trying to figure out how to regain the ability to build a meaningful share of the world's most advanced chips in the U.S. This is complicated and hard, and it's very consequential. We have three great people today to guide us through this topic. Mike Schmidt leads the CHIPS program at Commerce and is responsible for deciding how to allocate the $39 billion and the terms and conditions of those grants. Chris Miller is the author of Chip War, the definitive, excellent history of how we got here. And Greg Ip is the chief economics correspondent at the Wall Street Journal, and he'll moderate the conversation. Just thanks, Greg, and thanks to Mike and Chris.
Thanks a lot, Tim. It really is a privilege to be up here speaking to Chris and Mike, two excellent people that I've gotten to know over this studying this topic. I mean, personally, my last hands-on experience with chips was 30 years ago when I was editor of our college paper, and our computers would regularly break down, and I'd have to open them up and take a memory card from one and put it in the other. And since then, I've kind of completely basically blanked on everything related. But I corrected that problem by picking up Chris's book, and I was telling Chris I paid him the ultimate compliment, author's ultimate compliment, by saying I actually went and bought this book. I didn't actually make the publisher send me a free copy. And really, you should really read this book if you want to understand this topic. It's very readable and informative, Chris. But I want to start with you because I want to start with the basic question about why do we care about semiconductors so much? I mean, we make a lot of things. We've outsourced a lot of things. International trade is all about specialization. How are chips different from oil, cars, machine tools, antibiotics? Why do we think that semiconductors are somehow special and the U.S. has to have a domestic supply of these things when we don't feel that way about anything else?
Well, I would say that chips are like oil in some ways in that everything relies on them. We need energy for every aspect of our economy, and we basically need chips for every aspect of the manufacturing base, from microwaves to dishwashers to a new car, which will have on average 1,000 chips inside. It's not just your phone or your computer. It's basically everything that's manufactured with an on-off switch requires at least one and often dozens or hundreds or thousands of chips. But they're different from oil in an important way, which is that oil is basically all the same, whereas chips are all different. There's very different types of chips produced by different factories. Some countries produce one, other countries produce others. And so if you begin to dig into the supply chain of chips, as car companies had to do during the pandemic, they found that they were sourcing chips from dozens of companies in a number of different countries. And they also found that the world is increasingly reliant on a smaller number of countries to provide their chips. And the most important example of this is Taiwan, which today produces around 90% of the most advanced processor chips, the chips in your phone, the chips in PCs, the chips in data centers, and basically today 100% of the advanced GPU chips that make artificial intelligence possible. So there's no other industry that is simultaneously critically important to the entire economy and also so concentrated in just one country.
But why is it therefore important that we have our own supply of them?
Well, I think my view would be that if there are multiple suppliers that are resilient, where we don't have to worry about earthquakes or about wars, I would be much more comfortable even if they weren't produced in the United States. But that's not the reality. There's one company in one country that are producing all of them, and that is a situation that is becoming even more concentrated as time has passed. We have more concentration today than we did a couple of years ago, and it's only thanks to government policy that that's going to change.
Speaking of government policy, Mike, you and I have talked about chips a number of times over the last year. First of all, answer the question why it's important that the U.S. have its own supply of chips and not simply rely, say, on friendly countries. And second of all, tell us where we are with, how does CHIPS fix that problem, and give us a progress report on how that program is doing.
So I like Chris's frame. I think the goal is a more resilient global supply chain. And then the question is, what is the U.S. role in achieving that outcome? And the way I think about it is the U.S. has a really important role to play. Why? Number one, we're a big part of the global economy, about a quarter of the global economy. So that's just an important starting point. And then we have tremendous national assets to bear on solving the problem. A tremendous workforce, university ecosystem, abundant natural resources, and very importantly, we are the location of the world's major buyers of chips, particularly on the leading edge. So all of that works together to say, the United States has a really important role to play in, being a source of more diversified global supply chains. And I think you're seeing that in how the CHIPS program is unfolding. I think the results thus far are pretty extraordinary. We have first set of investments happening at extraordinary scale, so more than $300 billion of committed investments. Those are investments that are not only been announced, but that's actual money going into the ground. So since the CHIPS Act passed, there is more investment in electronics manufacturing happening in this country than in the previous 26 years combined. So that's you see a hockey stick impact in terms of actual investment. That is the result of the CHIPS Act. And then the individual investments are extraordinary in their scale. Intel's investment program, over $100 billion, the largest by a company in the history of this country. TSMC's investment, $65 billion in Arizona, the largest foreign direct investment in the history of the United States of any industry. Samsung's investment of roughly $45 billion in Texas is the second largest foreign direct investment in a new project in the history of this country. So the scale of what we're doing here and seeing here is truly extraordinary. I think the diversity of the firms that we're attracting to the investment in the United States is truly extraordinary. So Chris talks about concentration. The concentration is not only geographic, it is also in firms. There are only 5 firms in the entire world capable of producing leading edge chips at scale, both on the logic side and on the memory side. We have agreements in place with 4 of them to expand dramatically here. And the 5th is SK Hynix, just announced a packaging project in Indiana. So I think the diversity of firms is remarkable. And then the last thing is the technologies are really important. So each of these firms is bringing the most advanced technologies to our shores. And we have advanced packaging, which is hugely important. We can get into that. We have R&D investments happening in a way here. Intel's investments in Oregon have long been a kind of pillar of American R&D. As a result of the CHIPS Act, we have Samsung building an R&D fab in Texas. Right now, there are only 3 places in the world that do leading edge process technology R&D. in Taiwan, in Korea, and in Oregon with Intel. We now have a fourth because Samsung's doing it in Taylor, Texas. So the scale, the diversity of firms, the technology, I think the results, there's a lot of work to do still. We can talk about that, but I think the results thus far are extraordinary.
Well, on the work to do, where are we in terms of like actual money going out the door, chips actually being made? When will the first American-made chips start appearing?
So, so there are, first of all, there are chips made in America now.
Okay, sorry, yeah.
Meaningful volume, not
From the chips subsidized.
what we don't have is any chips on the leading edge being made right now.
Yep.
So as a result of our investment, we expect to see, we've said a goal of 20% of leading edge production by the end of the decade. There's an independent industry report that now is projecting 28%. So somewhere in that range. If you go to these facilities, what you see is extraordinary. You see 10,000 construction workers driving in and out every day. 50 cranes, some of the biggest cranes in the world, erecting these facilities. Just remarkable progress, and I think we'll see chips being produced out of chips-funded facilities maybe at the end of this year or next year.
Wow, end of this year? Which one would that
Potentially. Well, I might not get into it.
No, right now. All right. Okay. So we are obviously embarked on a fairly aggressive experiment in industrial policy, and I want to sort of ask some sort of foundational questions on that. So the U.S. was once the leader in a lot of things, a lot of electronics, right? Not just chip making. And a lot of that migrated to East Asia. And for a while, we lost our leadership in semiconductors to Japan, which put on a huge push. Looks a lot like China's now. A lot of big companies, building a lot of capacity, motivated more by market share than by profit margin. And there was a panic in the United States that was very similar to what we see today. And yet, 10 years later, Japan had more or less lost leadership once again as the industry moved from memory to logic. Intel was on top. And so it kind of looks like that panic was overdone. And the United States today economically is doing very well, having pursued a model that more or less turned its back on the industrial policy that is so popular among countries that are not doing well. So I guess I want to ask the question, why can't we just trust the market more to fix this problem? Why are we so fixated on the idea that we have to get in there and steer this instead of allowing the market to fix it as it has in the past?
I think economists say trust the market, and they assume a world in which there aren't any wars. And that's great for economic models. The reality is the international environment is grim. Anyone reading the headlines out of the Shangri-La dialogues in Singapore this past weekend, where the Chinese Minister of Defense and U.S. Secretary of Defense were speaking, it's hard to be reassured about the situation between China and Taiwan. The difference between the U.S. trade disputes with Japan in the 1980s and early 90s and the U.S. and China today is that the economic considerations are secondary to the political considerations of what happens if there's a conflict. And the reality is today, we've got almost all leading edge chip making in Taiwan and a growing share of lagging edge chip making, which we can talk about, in China, all of which will get knocked offline the moment a potential escalation begins. That's what's behind all this. And so to use the phrase industrial policy, I think turns it into an economic problem, and actually, first and foremost, in the minds of the members of Congress that pushed the CHIPS Act through, is a security problem. It's what do we do if we lose access to these critical supplies of chip making, which are right off the shore of China?
Right now the U.S. produces 0% of the global supply of leading edge chips. There is no way that changes absent a public policy intervention. So you can decide, we're okay with that. You have, the world's kind of foundational technology, critical to militaries, critical, we haven't talked about AI yet. You're looking at decades where national security, public policy, geopolitics will be shaped by AI. The United States is a leader in so much of AI. I mean, our workforce, our firms, our innovation ecosystems unmatched in the world. We produce none of the chips that are necessary to fuel that boom. And so, again, you can decide that's okay,
yeah,
or you can decide that there's a security value as a country in building a greater degree of resilience.
I guess I would also ask, has there ever actually been a free market in chips, or has it always been a heavily sort of like government influenced? industry?
Certainly in the history it has been government influenced, and today if you look at subsidies going into the chip industry, you can look at our friends in Asia, but you can also look at the largest subsidizer, which today is China. And so I think absent, my economist friends like talking about a level playing field. That's a great theory. And then I ask them to put it in practice. And the reality is that no one's got a theory of the case for how you convince China to adopt a level playing field, to say nothing of our friends in East Asia. And if that's your starting point, again, you get back to what Mike was mentioning, which is you can opt into a world in which you don't produce any chips, in which your market share declines every year, then you've got to live with the security ramifications of that.
So if you've made the case for why semiconductors are special, and this is a place where we should do industrial policy. But one of the reasons we don't do much industrial policy in this country is because we don't have a good track record of it. We have had like the Jones Act to protect shipping for a century now. We make less than 1% of the world's ships, and as a result, and Americans pay extraordinarily high prices for shipping. I could look at things like supersonic transports, like God knows how many industrial policy adventures we've had in energy, like FutureGen and Syncrude, all of which ended up being gigantic white elephants. What have we? Mike? Did you learn looking from that history? How do we make sure that the industrial policy we're doing with chips does not repeat the mistakes of the past? What have you figured we did wrong in the past that you are making sure we don't do now?
Well, I was the first employee of the CHIPS team back in September of 2022. So you don't think about this, but major government program starts. There's no infrastructure. There's no model. You're just, Tim went through this with his adventures in government, but you're starting with a blank slate. And by the way, that was from a kind of craft of government standpoint, one of the most exciting things about it, because the legislation provides a fair degree of flexibility, a lot of discretion to the executive branch, and it's a question of can you make it work. Secretary Raimondo, felt, I would say we had to focus on three things early on. Thing number one was people. Like you have to get a good team in place. And Secretary Raimondo in particular is a magnet for talent. And we've just built this extraordinary group of people. CHIPS office is now 150 people. And from all walks, private sector, investors, industry, government backgrounds, national security backgrounds, workforce backgrounds, et cetera. So that's been a huge asset, impossible to do without that. The second thing really important is setting a vision. It is very easy, and you see, I think, this a lot in state economic development programs, to make a whole bunch of investments and then try to step back and discern a strategy. I call it like you put the stars in the sky and then you draw the constellation.
Yeah.
We really wanted to take a different approach, which was to kind of, you don't have to draw the full constellation, but you should have a sense for what it's going to look like. And then we felt accountable for explaining that to the public, right? So we put out what we call our vision for success that talks about, in reasonably concrete ways, what our objectives are going to be. That required a lot of work, a lot of deep thinking early on while we were hiring the team, while we were building the program, et cetera. But we thought it was that important to kind of put that stake in the ground. It's been a really important device for engaging our applicants. Our applicants respond to it. They understand what we're trying to achieve. They help us, interested in our funds, kind of effectuate that vision, but also an important advice internally. Like internally, as we are sitting in investment committee meetings, as we are talking about portfolio allocation, we are constantly coming back to that vision, right? So we are kind of anchored in what we need to do and achieve for the country. And then the last thing is you have to build, once you have the team and the vision in place, you have to just build the pipes of a program, the nitty-gritty programmatic details that allows you to effectuate against those goals. So in focusing on those three pillars, I think we've been able to build an operation that at this point at least is on the right track.
You mentioned success. What does success look like, and where does being profitable rank in the criteria of things you look at as a measure of success?
Hugely important. I think it is very important that our funding opportunity now outlines a set of evaluation criteria. Chief among those is economic and national security. but right after that are commercial viability and financial strength, right? So, we're providing a subsidy. It's not most of the capital is still coming from the companies, and it's really important that the project be on sustainable economic footing. That requirement's actually in the CHIPS Act itself. It's a statutory requirement that we look at that, and that's how we'll get to a point where hopefully we're kind of creating flywheel effects of ongoing investment that we need to achieve our objectives over time.
I would add two things to that. I think, first off, the decision that was made early on to provide a small share of overall capital was critical. CHIPS is, on average, providing 10-ish% of the capital, which means that 90% is borne by the company. They got a pretty strong incentive to get it right. I think the second thing was the decision that was made already in the writing of the CHIPS Act to fund both U.S. firms but also foreign firms investing in the United States, which is not what you normally think of when you think of industrial policy, but it's actually critical to having real competition among the companies to make sure there's not just one firm we're betting on, but we've got actually three when it comes to leading edge logic who have to compete amongst each other to produce the best chips most efficiently, and that preserves as much of the market as we can get in this program.
So, at least from my read of where the industry is on this, I mean, everybody, all the design firms, the Apples, the Qualcomms, the Amazons, ARMs, they're all enthusiastic about this, but they're very kind of ambivalent about their willingness to actually buy the output of these plants. And I feel like this is kind of like where the rubber hits the road. You can build a plant, but for that plant to actually be self-sustaining over the long term, it needs customers. And the company making, and the fab company needs to make a good margin. And is it the case that the customers are there and are willing to pay the cost differential for an American-made chip that ensures that these companies, that these fabs will be self-sustaining and profitable over the long term and will not simply become demonstration plants putting out tiny, eyedropperfuls of chips just to prove their American bona fides?
I would say from the company perspective, once they've put forward the capital expenditure to build a fab, they've got a very strong incentive to operate that facility.
But may I just add,
Yep.
They've also been very careful not to put all that money up front. So they're spacing their own CapEx in a very measured way, like building the shell, like Intel's building the shells, the machinery comes later, right? So in some sense, you can see that they're building optionality into their own plan so they can pull the plug if the business plan isn't going to be there in a few years' time. So I just wanted to add that.
No, that's right. And I don't know, Mike, you can talk about the way you're writing the contracts, but it seems to me that's actually a positive sign. Companies are thinking about this with market dynamics very clearly in mind. They're going to look at what's the smartphone market and what's the PC market and what's the AI market and when exactly will they move tools into the factory. To me, it seems like very predictable. If you ask a big customer of chip companies, will you commit to buying from X or Y facility? They're going to publicly say, we're not going to commit to it because they're in negotiations. And so I'm not at all surprised that we haven't had very many big announcements from customers saying, we will publicly commit in advance to buy from this or that facility. I think when you talk to them in private, what you find is a lot of excitement about a more diverse supplier base, because the companies that are buying chips don't want a market in which there's one 90% supplier and they've got very little flexibility. They want a more competitive market because they benefit from lower prices and they benefit from more choice.
Yeah. Our awards are also milestone based. So, as Chris said, we're funding a reasonably small share of the project, and the money goes out over time as the shell is built, as equipment is installed, as chips are produced, right? So we are making sure that as taxpayer money is spent, it is spent as taxpayer objectives are being met. So I think that's really important. I also think that the point you raise is a really good and important one, which is there's obviously the purpose of chips in part is to help close that cost gap so that it is attractive to the buyers of the chips. And I think that not just in chips but across the world, we all have a role to play in kind of creating more awareness than there has been in challenges associated with supply chain resilience. Like I truly believe that over time the cost of fragile supply chains can be kind of priced in. That requires awareness. That requires telling the story. That requires investors and others kind of playing that role. And I think that's I think that's something I hope to see more and more of over time. I think you see it most acutely in chips right now because chips kind of got the kind of narrative out of the pandemic was so immediate and concrete.
Yeah.
But I think it's something that needs focus across the economy.
Just staying on the profitability question, to what extent are yours and the industry's interests aligned? By which I mean that when you put out your requests for proposals, there were a lot of criteria in there that weren't explicitly connected to making the ultimate project profitable. Requirements for on-site daycare for construction workers and operators, union scale wages, preferred unionized workers, can't use funds to buy back stock or pay dividends, can't do licensing or JV agreements with China. A lot of things that were very constraining on the freedom, on the degrees of freedom these operators, manufacturers have. And I know that, like talking to a lot of people, there was a lot of grumbling about that. And publicly, I know there were some Republicans who voted for the CHIPS Act, having buyer's regret when they saw what they saw as progressive priorities being layered into this. So does that not get in the way of like ultimate success?
So I think, in terms of alignment with industry, in one sense, we're very aligned. We both want these projects to be successful. In another sense, we weren't super aligned because they wanted more money than we could give them. So the leading edge companies, those 4 companies, Intel, Micron, Samsung, TSMC, asked for more than $70 billion. That's like more than we had.
Yeah.
So so that took a while to work through that.
Yeah.
But then beyond that, I think we've been able to work really, really well together to execute against some shared objectives. And it's hard to go through everything in your list there, but as one kind of anecdote, we were at one of the leading edge sites, and for a big announcement, we're kind of looking over this massive. So I mean, all these sites are like a single one of these sites they're all bigger than Central Park. Like these are massive plots of land. A single fab clean room is like 11 football fields large. I mean, we're going to have like 130 football fields of clean room space in this country of all these projects. I mean, the scale is, so you're looking at, it's like tens and tens of billions of dollars, and an executive turns to the secretary and says, oh, by the way, that's where we're going to put the child care facility. Like that's, and by the way, a lot of these areas are kind of remote. If, I have a kid, if I were trying to figure out like how to deal with child, it's probably going to be helpful for them in attracting a workforce. And I think in that sense, it's been working out pretty well. So,
Chris, what do you think?
I think in any program like this, it's understandable there's a lot of political interests involved. And so one of the key challenges, if you look historically, of industrial policy is separating it from domestic politics. And the cases that have worked well historically with the Taiwanese, they did an extraordinarily good job of that. So I think as we think of metrics for efficacy, the extent to which we can keep these programs insulated from domestic politics, the better. And I think that's a challenge for Congress. I think it's a challenge for any administration as well.
You wrote in your book that I think that, first of all, there's 2 anecdotes I remember. One was like, I want to get rich. That was one of the major motivators for the foundation of the success of the industry. Another was that it was non-unionized, right? So do you think that those 2 sort of like foundational principles that were so important in the early success have been diluted by this administration's insistence on things like profit sharing and union scale and all that sort of stuff? We've already seen the reports on how construction in Arizona was held up because of conflicts with the building trades.
Yeah. So I've done a bit of interviewing around construction in Arizona with some of the relevant players. And I think the union issue is nuanced. I think on the one hand, the critique of being overly burdensome has some validity. On the other hand, if you talk to the contractors involved and ask them, what specific construction trades are you facing the most difficulty getting? What you'll find is them talking a lot about really unique skill sets where actually unionization is not necessarily problematic or could even be helpful. So my view has been more nuanced than either a yes or a no, it's good or it's bad. I think it's a sort of it depends, which is probably not the answer you were looking for, but I think it's the truth. If you look historically, one of the reasons why the chip industry was driving towards less and less regulated labor markets was because historically labor costs really mattered. Today, labor costs don't matter that much. That's the reality. These are super automated facilities full of ultra expensive capital equipment, and labor is a small share of your long run costs. And even at the construction level, labor is a moderate part of the cost burden. And so I think we too often over-index on labor costs as to why the US is more expensive than other locations. It's part of the story, but it's also a question of your depreciation schedules and your tax treatment of capital investment and other types of factors which are just as important and which aren't sources of kind of core comparative advantage. Those are sources of policy advantage, which the US has lagged behind on.
Prevailing wage, which is the provision you're talking, that's part of the statute, and is a part of a lot of federal statutes that involve construction work. And just one thing I would say is that we're talking about, I mean, I keep talking about the scale of these facilities, but when each of these sites needs 10,000 workers showing up every day, that's an all hands on deck effort to access that pool of qualified construction workers. And I think pulling the industry and labor and all these resources together to help achieve that, this really critical national objective is kind of what we should be doing.
So a lot of this, of course, is being done with China in mind, right? And China is not sitting still. And I want to drill down on the challenge of China here a little bit, because while we have made these apparently great strides on advanced chips, China's market share or production share in the lagging edge chips is growing. And they've gone from, what were the numbers I had here? I think they were at 17% in 2015. They're now around 21%, I think is the number I have. They were 17% since 2015. They're 31% now. They're on track to hit 39% in a few years. And these are actually the chips that we ran out of during the pandemic. It wasn't the leading edge chips. The reason that there were cars sitting unfinished, it was because we lacked in this thing. So notwithstanding the progress you've made, it looks to me like we're becoming ever more dependent on China for a crucial part here. And then there's another piece of China which I think is really important here. Chinese companies aren't required to earn back their cost of capital. And now just the other day we read that Elliott Investment, a hedge fund, is pressuring Texas Instruments to cut back on their capex, right? That's not happening to these Chinese, TI's Chinese competitors. So how can we seriously come out ahead in a contest with a country like that does not require its primary players to actually make money?
Well, I think that's why we shouldn't assume there's a free market in chips, and we should instead act on the basis of reality. The Chinese just announced they've closed their third national integrated circuit investment fund, $45 billion committed capital. This is their third national fund, and there's been local government funds and provincial government funds and supposedly private equity funds, where all the LPs are state-owned firms. The aggregate amount of funding that China's put into its own chip industry over the last decade is multiple times what the US government has put in, perhaps even order of magnitude higher. It's vastly higher. And so the thesis that we should just pretend this is a market and let trade continue is I think, hard to square up with the facts. And that's why I wasn't surprised to see the Biden administration increase the tariff rate on chips imported from China when they announced the new tariffs a couple weeks ago. Now that's actually a pretty small step, because most chips aren't imported directly to the US. They're sent to Vietnam and then to Thailand and assembled into goods that are then sent on to the US. But I think we will, and I think we should see more effort on that front, both to deal with the trade issues. As you said, there are companies facing calls to reduce capex, but also the economic security issues. We've seen China impose sanctions on basically all of its major trading partners over the past decade, on South Korea, on Taiwan, on Australia, et cetera, et cetera. Do we really want our manufacturing base to be reliant on chips that are sole sourced from China? That doesn't seem like a very smart policy to me.
How would you fix that?
Well, I think I think the problem is real. Let me say that, and we are our team is very much in the market day to day, and you hear how what we're seeing from China is actually impacting prices, and it's going to be real, and I think it's an issue that requires serious attention. It's not an uncomplicated issue, because as Chris said, these are often, chips are often a small component of other products which end up being imported. And so what the exact tools are there. I think what we're doing in chips is part of that, right? And we should say, we're making investments not only on the leading edge. We spent a lot of time talking about leading edge today, but we've got a significant investment in Global Foundries. Global Foundries is going to build the first new greenfield, it's not really greenfield, but it's a new fab on their site in Malta, New York, current mature facility in a couple decades in this country. And they're, as part of that agreement, they're onshoring technologies that are particularly critical for national security, like their 22FDX technology, for example. So I think we have a role to play in that. Incentives might have a role to play in that, and I think we have to look at a broader set of tools. Commerce put out a survey. BIS put out a survey that is asking all the buyers of these chips, what are you seeing? What do your supply chains look like? There's a lot of data that needs to be integrated, and putting. It's important that we have a thoughtful conversation about this issue, and so I think that it's kind of more to come there.
And Greg, the other aspect of this, I think, is thinking through China's calculus here. Why is it that China is racing forward towards trying to achieve self-sufficiency in chips? You sit in Beijing, your biggest import every year is semiconductors, and you import them from strategic adversaries, from Taiwan, from Korea, from Japan, from the United States. And so it's clear there's an effort to become self-sufficient in case of war, that China will have the chips that its manufacturing base requires. And I think we should think very hard about why China's trying to do that. And I think that should catalyze us to think about this issue not only in terms of dollars and cents or will companies get return on capital of their investors' mandate, but also, wait a minute, if our adversary is trying to reach self-sufficiency to insulate them in case of war, maybe that's a sign that we need to do the same.
Do we need a second CHIPS Act? Do we have enough money in this kitty, or do we need a second CHIPS Act to meet that additional challenge?
I think that we cannot have it be the case that companies have an incentive, thanks to other government subsidies, to produce offshore. Before the CHIPS Act was passed in 2019, the OECD did a study that found that at least one U.S. chip maker, perhaps two, were receiving more subsidies from foreign governments than from the U.S. government. No surprise where they were choosing to invest. And I think that is just an unacceptable status quo. And so insofar as other governments continue to subsidize, the reality is there will not be a level playing field, and therefore we need to keep our business environment just as competitive. And that means tax policy.
Does that mean we do need another CHIPS Act, or at least we need to refill that kitty?
Well, I think at least the investment tax credit would be the easiest political lift. I think we can debate what the right mechanism is, but we can't be less competitive than our competitors.
Mike, do you have a view on this?
Well, for me personally, one CHIPS Act is enough. For our government, maybe that's a different matter. I think, the other lens I would take on this is we have a stunning level of demand for our resources, right? So we are going to end up, providing far less subsidy than requested in many instances. We're going to say no to a lot of disappointed folks with projects that are worthwhile, that are would be strengthening the supply base of the country. So in that sense, I do think that additional funding could definitely be put to use productively, and I agree with Chris, the tax credit's a really important incentive as well.
So we're obviously not the only ones doing this. We've seen numerous countries announce similar things since our CHIPS Act came out. I think Japan's now up to 26 billion. We're at 53 billion, 39 in the construction side only. Japan's up to 26 billion, France 5 billion, Germany 17 billion, as we announced, just another 50 billion for China. Is it time to worry about a race to the bottom here, where everybody is subsidizing this thing? We end up with too much capacity, too much unprofitable capacity, and the entire experiment ends up being a disaster.
So I don't worry about overcapacity at the leading edge.
By the way, can I actually add a second?
Yeah.
It strikes me that, and all of this is happening in an uncoordinated fashion, rather than us saying, we'll do these leading edge, you do the memory, you do the lagging edge, we're all doing the same thing. I worry about that.
Yeah. Yeah, so I think at the leading edge, the way the industry works is you have to build new facilities every year or so because technology improves every couple of years. And so you can have temporary overcapacity if there's a downturn in the smartphone market, but structural overcapacity at the leading edge, something we've never seen before. So I'm not that worried about leading edge overcapacity. I'm worried a lot about lagging edge, but the biggest investor in lagging edge is not the United States, nor Japan, nor our European friends, but China, over which we have basically no control how much they invest. So yes, is there a race to the bottom? There sure is. Who's winning? It's Beijing. And our job is to not let that effort impact our markets. I think that's the way to look at the coordination problem. You know, if I zoom out and look at coordination between the US and Japan and some European countries, there are obviously discussions underway. I'm sure Mike can speak to them in more detail. But actually, if you look at who's investing where, you find that there's not been a whole lot of overlap. The US is investing leading edge, Europeans much less so. Europeans and Japan putting much more in foundational semiconductors, which fits their industrial base's demands. And so if you were to zoom out and say, not knowing anything about coordination that has or hasn't happened, and just say, is there a lot of overlap between the investments made by G7 allies? I think you'd be pretty satisfied with the division of labor.
I think that's exactly right. I totally agree with that, and those are conversations we have actively with allies and partners. In the CHIPS office, we have a team dedicated to international engagement to build those relationships directly, and I think that coordination is a muscle that will build over time. I think it's really important. I think it's a good start. I think at the U.S. Europe Trade and Technology Council, it's been a consistent theme at the principals level. So I think you're seeing a lot of constructive progress on that front. I think what Chris says is right. If you actually look at what's happening across the global map, where investments are happening kind of makes sense for where the industrial base of each geography is right now, and we'll continue to work on that over time.
I do want to have some time for some questions, but I want to ask one more question before we go to our guests here, and that's about workforce. So obviously, getting industrial policy right is not just about making sure the demand is there, but the supply is there. And the biggest question you hear all the time in many industries, including this one, is workforce. You need really skilled, dedicated people, with the right training, the right attitude, right culture, and all that sort of stuff. And there've been a lot of stories about, for example, at TSMC. Supposedly, the Americans don't want to work the long hours that the Taiwanese do. I went into Purdue, where they were announcing the joint venture with SK Hynix, and that's top of mind for them. In South Korea or Taiwan, these companies have the pick of the creme de la creme coming out. Everybody graduating out of the top technical universities in those places assumes that they want to work at Samsung or TSMC. That's not the case here. I even had a fascinating conversation with a young gentleman who was doing a PhD in this science at Purdue. He was born in Taiwan, raised in Taiwan. So why do you want to study here? I don't want. Work-life balance is important to me. I don't want to work in Taiwan where you just assume you'll work at TSMC for the rest of your life. And I thought, well, if even the Taiwanese are coming here because they don't want to work because they have different things. That's a real challenge. So, question to you is: are we ready to meet the workforce challenge? It seems to me like that's a pretty big deal.
Yeah, I think it's an interesting dichotomy that I perceive. One is, yes, of course, you're building a new industry essentially from scratch, at least on the leading edge. Of course, building that workforce is going to take work. You got to roll up your sleeves, get it done. Work with local institutions, community colleges, universities, workforce organizations to build that pipeline. The good news about these fabs is it takes a while to build them. So while you're building them, you can be doing that work. And we, as a government, have a role to play. So all of our major investments include $40, $50 million of workforce investment where we're going to work in partnership with the company and local stakeholders to try to make that happen, right? So I think that's, of course, is a short-term challenge and one that I think we can address. So that's one part of the dichotomy. The other piece is when you zoom out, when we talk to executives, the strength of the American workforce the strength of our institutions of higher education, frankly, the strength of our economy, which just kind of hums along and is, in a truly remarkable way compared to, when you kind of look around the world. All of that is a major national asset as companies are making their investment decisions. Because if you are buying a plot of land that is larger than Central Park to build fabs, you're not only thinking about the next 3 years or the next 5 years, you're thinking about the next 20, 30 years. So,
I would say an interesting perspective on this question for the U.S. You get by visiting Tokyo or by Seoul or by Taipei or elsewhere where there's a big semiconductor industry, because every CEO you talk to anywhere in the world says their biggest challenge is workforce. In South Korea, the complaint is that no one wants to join the chip industry because everyone wants to be a doctor. In Taiwan, it's that the population is too small, they're importing talent from Southeast Asia. In Japan, it's that the average age at a chip company is 55. Everyone's got a workforce complaint, everyone's got workforce challenges, and so I think these are issues that have got to be worked through. But I guess that when I do step back and say, where do you have the best combination of chip manufacturing talent, which does exist in the United States, plus chip design talent, where the U.S. is by far the world's leader, plus the end users? The U.S. is by far the most attractive place there, which is part of the reason why I think you see some Taiwanese firms and Korean firms and others opening R&D facilities in places like Silicon Valley.
So we have a couple of folks with microphones here. Raise your hand. Let's start with Steve over there.
Thank you so much. I guess I'm Steve Clemens with Semaphore. I'm really interested in the question of making industrial policy work. And Tim Geithner and other people have watched, for generations, Japan, Korea, as you just mentioned, Taiwan and other, lay out their top 10 industrial targets for the nation. And I've never seen a better orchestration, whole of government, across finance sectors, across industrial planning. And my worry about what we're trying to do in tech, having gone from a period during the Obama administration where you couldn't say the words industrial policy, we were doing it, but now we're all in, is that it's not just about chips in a small sliver. You have to create an ecosystem, in my view, that completely surrounds that. And what I'm failing to see are the other dimensions of the U.S. government focused on this. HHS, you talk about talent. If you talk to Samsung and TSMC, they will tell you they cannot get the people in to the country easily that they feel they need to manage and operate and train the facilities that they're building. So I'm just interested in that, in what's happening to get that whole of government approach, which I think is the only way you make a real industrial policy scheme get embedded and work and be continuous across administrations. And I'm just wondering where we're at with that.
Yeah, I think, well, let me start with, maybe I'll start with actually where Chris left off, which is when you think about, at least on semiconductors, the ecosystem you're starting with, it's pretty good, right? We have incredible national resources. We have abundant energy. We have a fair amount of water. These things are really important for building fabs. We have a strong workforce, and we have a predominant global position in the acquisition of chips, particularly on the leading edge. So all of that conspires to give us real tailwinds that we're building off of. The question is, what can we do as a government to make sure that we are fueling that growth, kind of, and kind of breaking down barriers. And so obviously the incentive is an important role there. And then what we have done on the CHIPS team is build what we call our cluster support operation. So I have a team of folks who are focused, okay, we've decided, we got a few clusters that are going to be really important for us to succeed. And so let's roll up our sleeves and figure out what we need to do. And that could be working with state and local stakeholders on things like workforce or things like permitting. That could be pulling in other federal research or working with other, yeah, please.
So for example, when I worked for Jeff Bingaman, we had EUV lithography being developed at Sandia National Labs. That ended up, having investors. The creator was with Intel. Ended up at a Dutch firm. Intel disinvested or didn't invest in it, whatever. You saw that in flat panel. A lot of other in the national lab partnerships with corporations. You saw technology leap out of the kind of U.S. environment into others. So I don't know what the next EUV lithography jump is, but it seems to me that we need to be thinking about that and where that's going to come. And how do you seed that in a healthy way in the U.S. ecosystems? Unless you're doing that, you're going to be behind by the time you catch up.
Well, I guess that point would lead to another pillar of chips, which we haven't talked about today. I'm in charge of $39 billion for manufacturing incentives. We have $11 billion focused on R&D. It's building what we call the National Semiconductor Technology Center. It's now called NatCast. And the fundamental premise there is to be investing in kind of pre-commercial paradigm-shifting technologies so that the United States continues to be, frankly, at the forefront of innovation. So I think it all fits together as part of a broader strategy.
Question back there.
Yes, my name is Roger Cochetti. I'm an editorial contributor on technology policy for the Hill newspaper and recently did an op-ed on this subject. And two questions I raised that you sort of touched on but didn't really get to. One is at the highest level of abstraction, and the other is the lowest. The first is that for decades the United States lectured countries like Argentina and Brazil and many others that protectionism is ethically and practically bad. It hurts your consumers and it doesn't work. And what do we tell countries today like India, Turkey, Brazil, Argentina? Should they also, obviously Britain and Germany and Japan can do whatever they want, but should they not also strive to protect their economies, not just on high-end chips, but on other things, jet aircraft and things that they feel are essential? So abstractly, what is our orientation on the topic of protectionism post-CHIPS Act? Second question is, at the lowest level of practicality, how do we avoid a situation in which the companies that are favored by the U.S. government don't just hire enough admirals and congressmen, retired admirals and congressmen and whatnot to ensure that they keep being favored by the U.S. government? I mean, isn't this a death spiral you can get into here when you've got the U.S. government behind you? Then you have a lot of reason to keep that, to protect that. So thank you.
Maybe I'll do the second one, you do the first one.
Sure.
Okay.
Well, on protection, I think there's the economic framework of protectionism being about tariffs, and then there's the reality, which is we're trying to protect ourselves from a potential wartime scenario in which our entire manufacturing base shuts down. And so I'll leave the sort of abstract theorizing about protection to my economist friends. We're in a situation in which after 30 months of war between Russia and Ukraine, the entire Western world is being outproduced in artillery shell production by the Russians. The GDP is less than 1/15 of ours. We've got an extraordinarily severe problem, not just with our defense industrial base, but our entire industrial base, if in fact something goes wrong between China and Taiwan. And so the protection that I'm worried about is on this question. And so in my list of priorities in the morning, I worry slightly less about the implications of tariff rate changes in this or that economic theory, and a whole lot more what happens if something goes wrong in the Taiwan Straits. And by the way, it looks likelier every day I open the newspaper. And I think that has got to be the overriding focus of what we're talking about here. And we can leave the sort of economic theoretical debates to future professors to analyze.
And then the second question, which is, how do you avoid a scenario where firms are just winning through lobbying, I guess would be a way to put it.
Rent seeking.
Rent seeking. A couple of things. One is you need to design an extremely rigorous process, which we have done at the CHIPS office, right? So the rigor of commercial scrutiny, strategic scrutiny, financial scrutiny, it's what allows us to sit across the table from these companies and say, we know you can be successful with less than that, right? That's a hard thing to do in government. But we have, the Chief Investment Officer on the CHIPS team, Todd Fisher, 25 years as an investor. And the whole team we've built is kind of capable of engaging that conversation. So part of it is just like effective execution. And then part of it has to do with the structure of the program, which is, as Chris said, we're not providing incentives that fund an overwhelming amount of these fabs. At the end of the day, the projects that are going to be successful, and hopefully it's all of them, are the projects that can build fabs effectively and sell those chips to customers. You're not going to be successful, based on our 10% subsidy, whatever it is, unless you are able to compete commercially. That is how this program is operating.
One question back there.
My name is Tamar Chatterjee, Safe Foundation. Since we are talking about, I'll follow up with the last question. Now, United States, at least I've studied from Second World War onwards, has been playing with friends, allies, friends, and foes, pretty dirty to keep them inferior and keep its superiority. And has been pretty successful for a while, till China, thanks to Kissinger, Nixon and Kissinger, China came online, and they are playing as dirty as the United States has been playing since the Second World War. Now, does that mean the great Satan has met its match?
I feel like I should let you take this one.
Can I rephrase that question? And I'll put this in the way I've sort of thought about it. Does the United States have to be a little bit like China to win in this competition with China?
Yeah. I think there's a lot of reasons why I would not want to be like China. The horrific track record in return on investment, the overcapacity across industrial sectors, the fact that living standards have struggled to keep up with the rate of growth, and that China has allocated far too many resources to the corporate sector, to investment projects that have low return, if any return. None of that is worth replicating. But I think when you're in the midst of a competition that is not primarily between companies, but also in large part between countries, you can't have your head in the sand about that fact. And I think to our credit, we're going to be much more transparent than China is. We're going to have processes that people like Mike have designed. It's going to be all out in the public view. We'll have scrutiny from Congress and from the media. All that is very good. I want all of that. But I think it is certainly the case that if your primary trading partner and your primary geostrategic competitor is going to be mixing economics and politics, you can't pretend you can keep them separate.
I want to finish with just one last question for both of you. Even on the most optimistic scenarios, we'll have 26% of leading edge capacity at the end of this process, and that's 10 years from now. But there are people out there who think that Taiwan could become off limits to us within a year or two, depending on how you read the signals from China. At what point are we truly self-sufficient and no longer vulnerable? Is that actually an achievable goal?
I think we're never going to be self-sufficient. We're never going to be self-sufficient in the United States or in just the Western Hemisphere or in just our G7 friends. The question is a spectrum. How much less reliant, how dangerously reliant are we on potential conflict zones in places like the Taiwan Straits? And I think we're already beginning to see movement on that. If you look at the new TSMC facility in Japan, for example, to talk about allies, well, we've had U.S. firms publicly say they're going to shift their chip production from Taiwan to Japan to give themselves some more resilience in case of these types of crisis scenarios. So I think we're already in the early stages of seeing it, and it's going to build over the next decade as a lot of the investments that we've talked about start coming online.
Last word to you, Mike.
Yeah, I think self-sufficiency has never been the objective. The semiconductor supply chain is the most intricate, sophisticated, international, almost miraculous invention that exists in global supply chain. And that is not something that you're just going to say, oh, it's all here and we don't have to worry, we're shut off from it. It's not how it works. The question of resilience is it's not an on-off switch. It's you build it over time. And I think that, I'll come back to the statistic I shared at the outset, which is since the CHIPS Act passed, you've had more capital investment in electronics manufacturing in this country than you saw for the previous 26 years combined. The hockey stick effect we are seeing, that is resilience being built, and our job is to make sure that continues.
Thank you, Chris. Thank you, Mike. It's been an incredibly insightful discussion. Really appreciate you coming and spending some time with us. Thank you to the audience.